How's it going, everyone? My name's Joe Morrison. I'm a commercial real estate broker based out of Northern California. And in this video, I wanted to focus on 3 important metrics in commercial real estate, and that is price, cap rate, and net operating income, or NOI. Now, I wanted to start this video with the question, have you ever seen an investment property online, or you received something in your email inbox and you asked, is this a good deal? How much money could I make from this investment property? And how much should I offer? I'm going to show you some quick calculations that you can do at home or on your calculator to determine if this investment property is a good deal. So let's get started. So let's start with price and cap rate. Let's say that you saw property online and all you saw was the price and the cap rate, nothing else. And for this example, let's say that the price is listed at $1 million and the cap rate is listed at 7.5%. Now, before we go on any further, you're probably asking, what is a cap rate? Well, it is short for capitalization rate, and it's a valuation metric that estimates potential rate of return. It's calculated by dividing the net operating income, and we'll get onto that later in this video, of a property by its current value or purchase price. Now for this example, we know the purchase price and the cap rate. So how do we determine the net operating income? And by that, I mean what the property is generating after all expenses on an annual basis. So rather than worrying about dividing, which we would do if we knew what the NOI is, we're gonna do multiplication. So we're gonna have the purchase price, but before I get started, I'm gonna do all the calculations on my phone and I'm gonna record the screen so you'll be able to see what I'm typing in real time. All right, so we know the purchase price or the listed price. So in this case, it is $1 million. So I'm gonna punch in $1 million on my calculator and I'm gonna multiply it by the cap rate. So in this case, it's going to be 0.075 because you move the decimal point over 2 points. You're going to click equals, and that's going to give you $75,000. So that is the property's net operating income, or NOI. Now, before we go on any further, is this a good deal? Is this worth it? And so far, it looks pretty good. But now let's move on to what if you only knew the net operating income of the property? Like, what if you only knew the NOI and you want to use that figure to determine the offer price that you want to put in your offer, and based on the target cap rate? So I know this might be a weird example, but treat it like practice. You know, it's going to be very rare that you're going to find a property online that you only know the net operating income. But let's give it a shot to make you feel comfortable on how to use these calculations to determine the cap rate, NOI, and the target or favored price that you would put in your offer. So for this example, the NOI, or net operating income, is going to be still $75,000, but the cap rate is going to be 8%, not 7.5. So you take your calculator and then you put in the NOI, in this case $75,000, and the target cap rate, what you want to use to make an offer on the property. Let's say you want to pay something that is 8% cap rate. So you do $75,000 divided by 8% in this case. So you got 75,000, you divide it by 0.08 equals, that's going to give you your target offer price at $937,500. Now, using these 3 valuation metrics and these calculations that you can just do on your phone, you can play around with your calculator and determine what investments to go after based on your income goals. You can also use these to target properties or make offers based on your target cap rate. Let's say you're borrowing money and you want a cap rate or rate of return that is gonna cover your debt service. For example, interest rates may be at 6.5%, and if the asking cap rate is 7, well, that's gonna barely keep you up. You're not really gonna be making any money, and your cash flow's not gonna be that high after your net operating income and your debt service. Now, third, you can use these calculations to find out your target price. Let's say a property is listed online, and I see these all the time. It'll be an investment property that nothing is listed. Everything is undisclosed. It says investment, but how do you know it's an investment? The listing broker has nothing advertised. Well, you could use these calculations to determine what offer or what price to put in your offer. You might be asking, well, I have to call the listing broker to determine what the expenses are, or I have to email them, I have to wait for a response, but they don't know that you're a savvy investor. So you spend a couple minutes researching comparable leases of the property, and you find some tenants nearby paying comparable rates, and you use those rates to determine a gross income that you think, or you accurately estimate what the property in question is generating. And what you do is you deduct 30% for expenses, and we'll do that calculation right now. So let's say for this example that the gross income is $80,000 a year. All right, so we go back to the calculator, you'll take $80,000. And in this case, since we are removing 30% of the gross income to cover the expenses, that's kind of the general rule of thumb, the standard. Sometimes it's higher based on multifamily, it could be lower based on industrial, and of course triple nets. Well, that's there's not really going to be that much expenses for the landlord because it's all going to be covered by the tenant. Nonetheless, let's move on. So we have 80,000 gross income. We deduct 30%. So in this case, we're going to multiply the 80,000 by 0.07. That is the 70% after you deduct the 30% of expenses. And so after you multiply the 0.7, you're left with $56,000. That is your net operating income for that property. That's your estimated net operating income. So now you know your net operating income. You want to target a cap rate that will cover your debt service. So let's say 8%. So you started with nothing, the property was undisclosed, you did some estimates, some accurate comparables, you now have a net operating income of $56,000. Now let's target an 8% cap rate. So you divide that $56,000 by 0.08. All right, so when you divide by 0.08, you're left with $700,000. So that is your target price for that property in question that was once undisclosed. And the most important part about all these calculations is in a matter of minutes, or however long this video is going to be, you just basically underwrote a commercial deal. So give yourself a pat on the back. Now, whether you're a broker, investor, or on your way, or your goal is to become one of them, a broker or investor, knowing these numbers or knowing these calculations will give you the edge on how to spot good deals and which ones to walk away from. And if you did find this video helpful, please give it a thumbs up, and also drop a comment below. What cap rates do you think investors should be targeting right now? I'd love to hear your opinion.